Good morning, guys. Okay, let's start with the video. Okay, CFT. Okay. Good morning, guys. Okay, let's start with the video. I don't know if anyone is already here, but if it's the case, I'm going to be doing like the overall recap in 2-3 minutes. Okay, let's just wait for people to join. Okay, what did we have here? Okay, what London hikes. Yeah, we already took these ones. Let's continue. Okay, I'm going to be checking the comments, guys, and we'll start in 1 minute. Okay, let's just wait for anyone who wants to join. Hey guys, hey, hope you're doing great. Okay, so yeah, let's start. I was just checking some stuff here, and let me know if you can hear me clearly and if you can see my screen with no delay. I mean, you should be able to see everything. Okay, let me see. I'm going to join to the stream on my phone. Thank you, Kick Robin. I really appreciate it, man. Okay. Okay, perfect, guys. So yeah, I mean, I don't think this is going to be a very long stream because today we have FOMC. I'm going to be on a stream also tomorrow, so yeah, don't worry. I mean, the idea is being on streams on YouTube at least 2 times a week. Okay. The one that I'm going to be doing for CFT, I think I'm going to move it a bit earlier so we can actually trade, for example, not a launch session but actually New York session. And yeah, I mean, the idea is pretty much like either live trading, for example, the ones that I sent on the morning on the streams, or if it's launch session, just sharing, for example, the overall picture for the rest of the day. So let's start, okay, with, and I think I mentioned this on the last video that I posted on X, but I basically always start my analysis on the monthly charts actually and on the yearly. Ideally, you want to start on the yearly. You want to be looking for the yearly open, and you want to answer if we are, for example, on a yearly expansion or are we on a continuation, or what type of yearly candle are we having right now. For this year, it seems like we had an expansion. I don't think this is going to move much higher from here. I mean, we could always take all-time hikes and continue going up, but it was I would say it was a nice year, a bit rough because we had a lot of chop, way different than on the last one and the previous one before that. I mean, in the previous one it was mostly just like expansion, as you can see, like big bodies, really tiny candles, except this one, which was when we reversed on the monthly here. We had this wide range. We took the external liquidity here, we create a strong high, we sweep it, and then we inverse this fair value gap, and the rest was basically just looking for the FIBGs. But anyway, let me know if you can hear me still right now. I think I'm going to get an Elgato system for just like for the comments and all that stuff. And let me check if everything is going well. Okay, perfect, guys. So yeah, let's continue. So yeah, so I will always start on the monthly and on the yearly. Ideally, okay, I don't want to explain, of course, all the system because at the end it's not the goal. But yeah, we want to be positioned to the opposite side of the yearly expansion. So if we are, for example, trading above the yearly open, like here, for example, or here we have a flat candle, more like here, for example, here. Actually, did we do this? I don't remember really. Yeah, okay, we didn't. But yeah, pretty much you want to be positioned at the opposite side of the candle you are trading, which means going on for the monthly. Okay, so if my internet is not going like extremely well, going on to the monthly and look for the flow. Okay, what type of flow are you having right now? And I mean, just take a look at the structure. So for example, here you are on a range, you shift the monthly structure to the downside after taking rate hikes, yearly open, and deviation to the monthly fair value gap. Here we didn't have anything like that because the monthly was pretty much just like a flat candle, even though we actually did have a really nice shift. But anyway, same here. You can always go, of course, to the weekly. You get a bit more data. Actually, this is something that I trade live on my Twitter account. If you go to X, you're going to find that I actually traded this, and I was targeting this little flat candle. Okay, on TPO, this was pretty much like the Bordeaux, and we had a really clean weekly range. Okay, we had a really clean weekly range, and as you can see, let me see if I can find it. What I'm looking for. Okay, yeah, we have the. Okay, sorry for my internet. The weekly fair value gap. Okay, sometimes monthly doesn't offer a retracement, which is fine. I mean, at the end, if you are, for example, on a trending environment, clearly, for example, like this one, you don't want to be looking for shorts on the range lows of the next range on the weekly. And yeah, this was pretty much something that I traded live. You can go and check it out on X. I think it's pretty much from the last year, so you will have to scroll down a bit, but yeah, I will see if I can help it just looking at the overall breakdown of this one, because I think this is pretty much like the best live explanation of the how to buy the weekly, the yearly candle. But anyway, okay, yeah, we have the deviation below the yearly open. Okay, if I'm not mistaken, where is this one? Yeah, here we have the deviation below the yearly open, and always you're going to have the deviations into high time frame levels, ideally into weekly or monthly. I mean, it will happen you don't get any type of retracement to those levels, and price can continue just going up. But as setup, I mean, this is ideally what you are looking for, like some high time frame weekly or monthly level, a deviation and a shift just to enter. It doesn't really matter if you're using EMAs or anything. I mean, you're going to have often like the 100 and 200 EMAs on the weekly and on the monthly. So it's pretty much all the same. And you can just wait for the trend reclaim, or for the shift is also in general the same. So let's continue to now the current price action. So this for the monthly, for the yearly, but it's no different on high time frame or lower time frames levels. So now that we have defined, for example, that we have a yearly expansion, still trading above yearly open, I say we can go and take a look, for example, at the monthly structure and to see what we have. Okay, we have price shifting here structure, creating this little low here. Okay, perfect. This is the range that we have, the current dealing range, and what point of interest you can see at discount of this dealing range. Okay, let me this little fair value gap. Okay, there are multiple ways you can, for example, frame this on the weekly. You can do it with EMAs. You can do it, for example, with you can do it with VWAPs. For example, here you have the yearly, sorry, the yearly VWAP, and I mean in multiple perspective. This is pretty much a really strong, point of interest. This one, I think it's the monthly. I can remember well. Yeah, I mean, if we close 2 months more like this is where the trend should be, around. Maybe just a slight higher deviation, but in general, majority of the levels on higher time frame charts end up overlapping at the same place. So yeah, this is pretty much the place that I'm looking for a possible retracement. That doesn't mean that because the yearly expansion is bullish, and because the overall monthly structure is bullish also for me, I'm going to be looking instantly for longs. As you know, I'm still waiting for this point of interest to be hit, and my confirmation for this. Sorry, and the reason why, of course, I'm not longing exactly here is because we're right now trading on premium, and as you can see, we already took out here these hikes. We took out these hikes, and it seems like we're going to close below previous month high. So for me, this is an early indication that we're likely to go lower, and for the next month, which is in 2-3 days, guys, I mean, you want to be careful trading here. Personally, I want to see these lows being taken. If we take these lows, okay, then I'm going to be really confident looking for longs until we go to all-time highs and likely higher levels. Okay, I don't really have like defined targets. The way I define targets is often, for example, when I have a strong pivot. So if I get a pivot here on the monthly charts, let's say we get a nice, let's say we get a choppy next month, or maybe a small expansion, I don't know, and then we have like a dump on either December or January. I mean, it depends. We have to build like the macro. But anyway, whenever we get this point of interest and a shift in structure on the daily, or for example a weekly sweep with an H4 shift, I'm going to be using that P1 point, which is, for example, from the system that you've seen me use on break funded. Okay, let me see if I can go here. Okay, just confirm me, guys, if you can still hear me correctly, if everything well from your side. And I'm going to be checking in a second the. Okay, let me see. Can you hear me? Okay, that's me. This is my other account. Okay. Okay, perfect. So yeah, let's go. And perfect. Okay, let's go. Just give me a second, guys. I'm getting access to the dashboard. Because I want to show you, for example, how do I use. I mean, briefly. I mean, I don't really want to go deep on this. Just like an overall walkthrough. Let's wait. I think my internet is a bit slow right now. Okay, let's wait, guys. Okay, it should be open in a few minutes. Okay, I have to enter from C. Okay, I'm going to show this on the next stream, guys. Yeah. But anyway, once we form here the low, for example, with a shift in structure, or all the other metrics, for example, that I use on my swings to confirm that we're likely getting that shift in the higher time frame flow from bearish to bullish, is when we are going to form the P1 of the yearly candle next year. Once that happens and we get again the shift, now with the previous historical recurrences, we can create, for example, a hypothesis of where price is likely to go. So for example, I mean, these, I would say, in these ones, if you go to my, I think it's on my actual, or my current Telegram, but if you go to my current Telegram, you're going to see that actually this first one and second sweep were setups that I actually mentioned it live and that we traded live, just using the monthly fair value gap narrative, and that we were basically pretty much on the same. We had the equilibrium, we had the monthly closing exactly at the 0.5 of the 5G. We had the first sweep, and okay, let me give you a moment. Yeah, perfect. Here we had the first sweep, as you can see here, perfect, and we had here, if I'm not mistaken, the change in the state of delivery. We never got the change on the state of delivery on the monthly, and even though we didn't got it, if you go to the Telegram and you scroll up for the last 6 months, you're going to find that exactly here I entered on a long. I remember very well this TPO candle. This was a really strong buy candle, and we were starting to get a bullish flow on the metric chains that I use. And here exactly was the point of control. And if I'm not mistaken, where was it? Yeah, here. Yeah, here we had like an SMT setup with Bitcoin, and then we shifted to the downside. But anyway, we never actually shifted the change in the state of delivery here on the monthly. It was until the next month, which was exactly that we sweep it again the month low, and we put in the pretty much the yearly low that we have right now. And with this, once you have this, you can create, for example, an hypothesis based on historical recurrences of where price is likely to go if this is the low. And if this is on a monthly pivot, and if you have weekly, monthly, for example, sweeps and the daily shifts, I mean, I would say with a lot of certainty that if you're getting also, for example, negative funding, if you're getting, for example, I would say funding is pretty much the most important metric that I use on swings. I also use, for example, exchange net flows. But yeah, I mean, you can pretty much get a really strong low with all that. But anyway, so right now we're still waiting for this point of interest, and actually I'm curious. Let's go. This is April 7, okay? And again, I mean, you can go and look for this on the Telegram. I recommend you guys to do it. April 7 was exactly April, yeah, here, okay. And this was the start of the expansion. Okay, no, we didn't have any crazy funding here, I think. It was only on the continuations. Yeah. Okay, here, yeah, it was mostly on the continuations. Okay, so I'm going to continue and let's mark out what's likely to happen, okay, right now. I mean, FETC is just going to expand lower, I think, from C. Yeah, I think it's like 2 hours, if I'm not mistaken. And yeah, this is pretty much my target. I mean, for short, if I'm honest, this is where I'm targeting. Like in general on the monthly, okay? That doesn't mean we have to go here today or tomorrow or the next week, or that we are actually going to go here. I'm just saying that if we go here and I get a shift in the structure and bullish flow of the on-chain metrics, for example, either open interest or order book depth, or like I mentioned, at funding, community volume delta, I don't know. I use 6 metrics. I need at least 4 of them lined up. The first one and the main one is funding. I mean, if I get funding, for me that's like really huge confluence to just go long with a lot of size, and not only go long, expect, for example, strong reactions. Because I would say funding is one of the few things that, because it's updated every 8 hours, and because it actually shows something important, which is who is paying who on futures, on perpetuals, it's pretty much, I would say, the most strong indicator that you can use on swings. But anyway, so what do we have right now? Like going now on lower time frames, okay? We have pretty much of a range here on Bitcoin, okay? We are on ranging conditions. I think it's normal to have this when we took, for example, the 2 sides of the monthly previous candle, and right now we are pretty much just consolidating and waiting for the monthly close. I think we are likely to have something like this. If I had to bet what is going to happen on the monthly opening, now that we took, for example, the hikes, if we are not able today for the FOMC, to do something wild and just pump here and get any bearish, for example, shift to enter, or just put in enter with white SL, which I don't think is going to happen. I mentioned it earlier. We had, for example, this change in the state of delivery, but I was not going to take it, and I mentioned the reason. I'm bullish on the weekly. I'm bearish on the monthly, okay? I'm bearish on the weekly and on the daily in general. For me, I just had marked out the previous day high, previous day low, and even though we were, for example, fulfilling this verbal gap, to be honest, I mean, this doesn't seem too bullish to me when you get like these inversions. These are actually one of the entry models people use for entries. So personally, I was not going to long this. I mentioned this in the morning. I mean, for me, it wasn't a good place to look for longs, even though we had an SMT, here, and well, the change in the state of delivery. I mean, and the previous day low rated. But yeah, I mean, we can't, for example, trade if we don't have an actual framework, and that's why people often get wrecked on the weekly charts, on the daily charts, on the H4 or the H1. Mostly, I would say on the H1, because they are longing in places when they don't actually have narrative. I mean, if you wanted to look for a trade here, it would have been either on this fair value gap or on this fair value gap. I don't know. Personally, I was keeping an eye, for example, to the H4 breaker with the FVG, which was roughly this one. But I was expecting a fulfill maybe higher, and I was waiting for FOMC. I'm not trading right now this. I mean, it was a nice breaker with 3 G's entry there. But anyway, let's continue, guys. So bearish on the monthly, bearish on the weekly, bearish on the daily. I'm not looking right now for longs. And so where I'm looking for longs, okay? Looking for longs. Okay, just let me put in this nicely. I'm looking for longs here. This is pretty much my spot for longs. And okay, maybe we could, for example, fulfill this or grab this liquidity and create like some lower time frame reversion, and because we are ranging, it could be valid when we're here on equilibrium of the range or around the range lows of the range. I mean, at the end, we are on a range also, but personally, I'm leaning more towards the breakdown of range. I already mentioned all the data that I use, and personally, I can't see right now anything bullish on this chart. Okay, and even if we pump it here, okay, even if we pump it here, that does not invalidate. For example, the last breakdown that I did on X. Why? Because at the end, the metrics that I use are mostly for swings. So for me, what I do is, for example, okay, I'm starting to see here, let's say, okay, I'm starting to see here that price and data is showing that we are, for example, trading, let's say, overextended on the monthly or on the weekly, and we have, for example, on the chain metrics, let's say from the 6 metrics that I use, I'm having 4 of them lined up towards bearish flow, and I get, for example, on a structure that I'm trading at premium, and we just took the range hikes, and the daily is just closing bearish here, and we are getting that H1 shift in a structure. I'm not going to be looking for a lot here. I mean, that doesn't make sense to me. But we could still trade higher here. That would not invalidate the overall thesis, because the overall structure is not bullish right now. So yeah, I mean, I'm just going to be cautious here, of course, because we have FOMC. So once we get the data of the later session, we can do more charting. I think. Now for targets here, I would say, because we are on a range in general from here to here, we could take, for example, the most recent range, which is this one, which is where we were rejecting on the value high. Sorry. Okay, give me a second. Okay, no, I think, let me see how I mark out this. I mean, there are multiple ways you can mark out the range, but at the end you're going to get the same, for example, volume nodes, and that's where you want to trade. Okay, if you want to refine this, okay, I'm going to use an aggregated TPO because this one doesn't mark out the level that I'm actually watching. For aggregated volume profiles, you can go to, there are multiple platforms. You can use ATAS, you can use Sierra, but I think I mentioned this early in the morning. I use, for example, mostly aggregated data on the tools that I use, and if the aggregated data doesn't match, for example, with Binance or Bybit, I often going to prefer the aggregated data. If I share, for example, a chart with Binance, it's just for practicity, because at the end, I mean, I'm not going to share the two. Doesn't make sense if the rate is the same. But yeah, just to highlight that, I mentioned this on Twitter. You can go and check out on a comment that I made to a guy. Let me see if I can find it, because he was asking me pretty much a similar question, like why are you using, for example, Bybit or Binance only? But it's not the case. I mean, I use aggregated. For example, here you can see funding, all exchanges, exchange net flux, all exchanges, and same for the order book depth. Okay, where is it? TRDR. Okay, sorry, TRDR. Okay, yeah. Okay, my internet is a bit slow. Apologies for that. But basically, let me see if I can find this. Enhorabuena. Okay. Okay. Your notification. Exchange. Give me a second, guys. I'm just checking out for the comments, because I mean, I think it's something important, especially because I mean, personally, I found cleaner, for example, moves using the aggregated data than just using, for example, Binance. I mean, maybe like 4 or 5 years ago, you could use just BitMEX. I see some people only use BitMEX right now. I don't think that's something, something good to do, because at the end, BitMEX is not where the majority of the volume is right now. I think it's not even half of what it used to be back then, when a lot of people was trading on BitMEX. Okay, I'm not going to find this, but anyway. So yeah, target guy for the shorts, pretty much these lows, at least for the swing. Now, for lower time frame, again, you can start looking for some small reversals here, which is equilibrium of the range. And for example, here, previous week low, which is pretty much where we would finish the rotation from previous week high to previous week low. Right now, well, we're just at the very edge of the high time frame range, at the mid time frame range. So it's just waiting here. I mean, again, you can look for longs at the equilibrium of this, which is a bit lower than here. But personally, I think I'm just going to pass. For example, here on the PBG, and yeah, it's pretty much a bit below equilibrium, but it's pretty much like the discount zone where you could start looking for longs. Personally, this is going to be my first point of interest, where I'm not going to be looking with really high size, and rest is just going to be here. Here, personally, for monthly points, I use 2, 3, 4, 5% of my portfolio. It depends, of course. I mean, it depends on how good the setup is looking. Again, for example, if I have negative funding, let's go to CryptoQuant again. Let's say, for example, here we didn't have negative funding. Okay, that doesn't mean it's a bad point to be looking for reversals. Why? Because at the end, funding is not the only thing you're going to be looking for. For this cycle, I think it's worth looking at the ETF flows. If you are starting to see, for example, like something like this with a bit more of buys, like buys increasing slowly every day. Give me a moment. And you get, for example, let's say negative funding on a monthly point of interest with a daily shift. I mean, and let's say the exchange net flow is showing you that, okay, price is really looking exhausting. It seems like people are not looking to sell anymore. And yeah, I mean, if you have few metrics, for example, lined up, I'm going to show you guys like the cheat sheet that I use for on-chain metrics and all the platforms. I use 6 exactly, and they have like a hierarchy of points. Funding rate because funding rate is the one that I've back tested the most, and the one with better results is personally the one that have higher points on my swing system. Give me a second. Let's see if I can make this and work. Fuck, my internet shit. Okay, yeah, this you see, for example, here we had extremely high spike of open interest on November 2022. Same here. If you have here a monthly fair value gap, okay, daily shift or anything like that, I mean, those are moments where you can even enter 3, 4. I would say those are the few moments that if you don't have, for example, a huge capital, by huge I mean, I don't know, over $1 million, over 7 few years, I would say those are the points when you can start playing leverage with really high size and make 50% of your portfolio in one swing. Or, for example, if you have a big portfolio where you can enter, for example, on altcoins, and yeah, especially if you're, for example, getting some other metrics lined up, structure, volume, everything. I mean, everything. But let's go, for example, to the short term, and let's see, for example, for this year, the funding. I don't know why this is okay. Custom range, I think it's going to be better. For no, I just want this year. Sorry guys, fuck, I was here. Okay, yeah, I just want. Okay, 25. Okay, sorry. October, April. Okay, sorry guys. Yeah. It's here where I have to click it. Sorry. So 2026, 2025, August. Yeah, here. Okay, here. Let's see. I don't know why this is not working here. Okay, let's do it here to here. So you can see what I'm referring. Okay, perfect. Here, for example, okay. Here, okay, negative funding. Okay, price. This is Bitcoin price, just so you can actually like see it clearly. Negative funding, negative funding. Every time you get, for example, negative funding, especially on key levels. I mean, it's when you get, for example, like the huge squeezes. But I was not looking for. I was looking for a specific date. Looking for a specific date, okay. For example, here I think it was where we got the huge SMT with Ethereum. Yeah, if I'm not mistaken. Okay. Let's wait for these. Okay. Give me a moment. I don't know why my internet is so slow right now. Okay, this is August and September. August and September. Yeah. Pretty much this one. Yeah. This is where we had like the full sweep of these lows, and September 27, 28. Let's see. September, August, September. Okay, perfect here. 27, 28. We start getting negative funding exactly here after we had a huge SMT and the shift, as you can see here, on. Okay, so you can get like the context of what I'm trying to explain. Okay, now let's put in the trade fractal model. A lot of people ask me sometimes if this is like the only indicator. There is, and no, there are many others. Where's, let me check. What orange metrics you use? Where's giveaway? Which giveaway? And what happened to the Discord? I closed the Discord that we had last year, because I was in general, after all the stuff that happened at the lab, I was mostly focused on my academic stuff, and I was trying to push like social media, but personally it wasn't working for me too much. I mean, I didn't have too much time, and it was often like extremely dark some days. So yeah, I mean, it wasn't like something that I was feeling comfortable doing, like trying to, for example, trade live on YouTube 2-3 hours a day, pushing, for example, socials, and having, for example, a Discord. Because at the end, even if it was rewarding in an economic way, it wasn't enough for me to be just like too much time here, especially when I have things to do in real life. So it didn't really make sense. But anyway, let's continue here with the monthly. So what I want to show. I mean, the good thing is that right now I have like way better, for example, organization, and I mean, I wouldn't be, for example, on socials and near sharing stuff right now if I was still busy, for example, in real life stuff. And I was actually, I don't know if you remember, in talks with the AFYC, for example, to mix the crypto section with his future section, which is still actually on the table. I mean, I just need to finish maybe checking some stuff with him, because he's only focused on the future side, and it would be extremely great, I think, just to mix the crypto section with his future section. And yeah, I'm still going to continue discussing that with him. But anyway, funding negative here. Okay, let's see here. Let's go. Funding negative here. You get pretty much here. You get pretty much the SMT and a really small reversion, as you can see here. We had pretty much the same here, and if I'm not mistaken, we had no, we didn't have and then they had the funding there on the Bitcoin pair, but this was pretty much like the setup on the on Bitcoin, using, for example, just regular price action, monthly levels, SMTs, and pretty much the same stuff that I'm using right now. So right now, again, this is the first point of interest that I'm looking for. I'm just going to keep an eye, but in general, I'd say we're going lower, way lower. Okay, let's go here. Okay, as you can see, we got the H4 shift. I don't know if you guys entered to this. It was a really clean just retest. So if you enter it, nice. If you don't, I mean, I hope you are at least on the shorts that I shared on the group. I shared this one live with just the entry and stop loss around here. Then the H1, and then, well, all the scalps that we had, for example, here. If you took the H4 plan that I mentioned, you would have taken a loss at the London New York session, and then the continuation that was bearish and continue expanding lower. But anyway, multiple setups here, multiple trades. Right now, personally, I'm just looking to get at least a previous week low rotation. But I mean, I'm going to keep an eye in case we expand, for example, to the OT of this previous week range below equilibrium. Okay, and yeah, I'm just keeping an eye to this liquidity on the daily. But overall, this is pretty much the spot, a bit lower, I would say. And yeah, if by any reason we get, for example, a bounce here and we shift structure, I'm going to be careful, really careful with my longs, shorts, and I would say we could, for example, target just the OT of the sales range. But at the end, on the monthly, we're still bearish. Because as you can see, I mean, the structure in general is not supporting price higher. I mean, the actual change in the zone of delivery would be here, and it's a bit mechanical. But I do consider, for example, the on-chain metric. So yeah, I mean, it's just waiting here. Now for setups, maybe, for example, for later. Okay, actually, this is something I'm watching on gold, just so. So if you are interested, I mean, on the weekly, it's not looking bad. Not looking bad. We already finished the rotation from previous week. Here, liquidity on the weekly to this liquidity. Take this one, and at the end we're still trading above previous week highs, previous week's opening, monthly opening, etc. And we just got the H4 shift. I think I'm just going to try here a small trade. But yeah, I mean, this is not what I was looking to share. Okay, here. So for continuations, okay, later on the day, continuations and expectations for FOMC. Okay, let's go to lower time frames. And let's go to Okay, here, this is what I'm looking for. Okay, so we just put in the week, sorry, the daily week here. We shifted the structure at New York here on the H1. For me, this is clearly just like a continuation. And for launch session, I think I'm going to be looking here for longs, sorry, for shorts. And yeah, just any M5 shift that we can get on, for example, a deviation higher to either this verbal gap or this verbal gap. I mean, this is the dealing range that I'm playing for launch and for FOMC. I don't want to see price going higher, and I do want to see the shift once we get at these prices, okay? Because at the end we are already at the equilibrium of the weekly range, but that doesn't really matter because it doesn't have any context on any, for example, a shift on significant time frames. It seems like you're just going lower, and I would say this is the actual drawn liquidity, not the liquidity that we have right here. So yeah, I mean, I'm just going to be looking for continuations, guys, and this is going to be pretty much all for this video. My computer is running out of battery always, and yeah, I'm going to be sharing some live insights on the Telegram for launch session. I booked it a bit wrongly because it should have been like an hour later. But I think I'm going to get on a stream maybe in 30, 40, 1 hour just for FOMC. I think it's in like 2 hours, sorry. But yeah, in like 1 hour and a half, 2 hours, I'm going to get back on a stream on my own channel. But this is pretty much like the recap and the breakdown. And yeah, what you're gonna expect maybe for FOMC, which I think is going to be this low in 1 to 2 hours, okay? So see you guys later for the next stream. And if you have any question, okay, let me check quickly before my computer turn off. Okay, let me go and check out quickly. Okay, what on-chain metrics do you use? And okay, I already mentioned it. I use funding, I use exchange net flows, I use open interest. And if you want, I think I mentioned this earlier, but if you want, I can send you for order book depth. I can send you like a cheat sheet. I'm just going to post it on X, like the overall swing system that I use, and the metrics, for example, and which ones are more important. Which I say funding in general, funding for intraday and for weekly is pretty much the most important metric. I would say it's the only on-chain metric that actually I can say it works. Like it actually works. And there's so much backtesting on funding that I mean, I would say it's just like it doesn't make sense not to use it, especially when we have so much data collected on funding from so many sources and so many backtests, and when the actual ways funding works, funding actually gives like a live insight of what's happening on the market and what's more likely to happen. I mean, it's a really clean metric, I would say. So yeah, I'm going to share that later, and that will be pretty much all for the stream, guys. Appreciate if you join, and I think I'm going to do another stream, guys, later for the FOMC. So yeah, I mean, just wait for Bitcoin pot FOMC. It's pretty much waiting for this low being taken, and if we get any shift, we're gonna start, for example, considering some longs, and yeah, this one is the first one, this one is the second one. But for FOMC, I would say just going lower. So yeah, keep an eye here, and I see you guys later in maybe 2 hours. I don't know how much is for FOMC, but it should be like in 2 hours. I can find it now. You remove me? Yeah, man. Okay, I remove everyone. Okay, I remove everyone. But that was because I'm